Well, Honduras as a mining jurisdiction is relatively well established. Not too many mines in the country at this point in time. However, from a operating point of view, it's quite simple, quite straightforward. The rules and regulations are, as with many mining jurisdictions, the only issues that are slightly different are probably taxation. We pay a 5% NSR and a 25% income tax, which is only more of a concern at the bottom of the cycle as opposed to now. But everything else is relatively straightforward. We have very good relationships with the local politicians and the federal politicians. Given how important the mine is to the Honduran economy, we represent roughly 3% of GDP by itself. So again, it's a very robust sort of situation. Well, our outlook is very much in line with where most of the people on the street are looking at. We do believe zinc's in a structural deficit, probably for the next 3 to 5 years, as new supply is slowly brought on stream. We don't think we're at the peak of cycle at this point in time. We expect prices to go back above the levels we saw in 06 and 07, and that's really just because the rate of new development will not keep pace with even normalized low levels of demand. So it's very difficult to fix the supply-demand deficit in a short period of time. Over time, there's enough supply available. It will just take a matter of time, and we think we're well positioned to capitalize on that gap. Well, Ascendant is positioned to take advantage of the robust zinc price cycle in a couple of ways. One, we're in production. There's many zinc stories out there. There are development stories that need a bunch of money and a bunch of capital and a lot of time to be in production. So that makes us unique for a small cap story in production to capitalize on high profitability and good pricing environment. So that makes us, I think, quite unique relative to a lot of other zinc stories. You know, investors should look at Ascendant for a couple of reasons. First, in 2017, it was a turnaround story. We had to recapitalize the mine, fix a lot of historical problems. We've been very successful at doing that. We've seen production go up 81% on a monthly basis from January to December. Costs come down over 30%. We expect those to come down even more in 2018. At the same time, we're positioned to capture good zinc prices, which we think will translate into robust profitability in 2018. Yet in the market today, we're still not really getting credit for that. So I think over the course of 2018, as we continue to knock down the goalposts that we've set for ourselves, we'll get that recognition. We'll see that value in the share price. The key difference we see right now is the smaller cap names are getting even less attention than they were in the past. So you really have to be out there creating market attention, market awareness. There are so many stories out there clogging up the mind, investors' peace of mind, that you really have to stand out from the crowd. So right now, a lot of investors focus on big and liquid, where some of the smaller cap stories like ourselves probably have better value, but we really just have to get the name out. Well, for me, it's a great learning experience to expose me to the Asian side of the investor scope. I haven't been out this way that many times in the past, so it's a great introduction to hopefully what will be a new and growing investor base for Ascendant and myself going forward.